Canada, the United States, Europe, and Japan will move the gold market. 50-day EMA gets targeted. Anything below the 50-day EMA could open up a move all the way to the $40 level. The Nasdaq 100 is off to the races as the US-China trade deal has people very excited about this. Drop again on Monday. This is Chris Lewis from Hola Prime with your technical analysis roundup. Gold has fallen pretty significantly during the trading session here on Monday to test the crucial $4,000 level. The $4,000 level, of course, is a large, round, psychologically significant figure that a lot of traders will be watching closely. It's been very noisy previously, as of course there was a lot when it comes to headlines about this. But at the end of the day, it's worth noting that it's just another level, although I would anticipate a certain amount of options trading to be around that area. If we were to break down below the $3,900 level, then I think you see a bigger flush at this juncture. Anything below there opens up the possibility of a move down to the 50-day EMA. If we bounce from here, and we very well could, then I think you've got a situation where the $4,150 level offers a bit of resistance. We could go sideways for a little bit, and that's probably the best case scenario for those who are bullish out there. After all, this is a market that I think continues to see a lot of volatile, choppy moves. But keep in mind, the central bank interest rate decisions this week, Canada, the United States, Europe, and Japan will move the gold market. And I think you've got a situation where we have a lot of volatile moves just waiting to happen. And if we do hang out in this area, that would show a certain amount of resiliency that I think a lot of people would applaud. That being said, this is a market that went straight up in the air. I think it's got a lot to do to prove itself if it can continue to defy gravity. Silver markets look especially nefarious at the moment as we broke down below the $47 level and reached towards the $46 level. If we can break down below there, then the 50-day EMA gets targeted. Anything below the 50-day EMA could open up a move all the way to the $40 level. Silver is a market that loves low interest rates, and as we already know that central banks around the world are loosening monetary policy, there's nothing left to push it at this point. About 2 weeks ago, I started hearing people who aren't traders talk about silver, which is almost always a great sign that you're getting close to the end. The question now is whether or not we can go sideways. But with that being said, the $50 level above being broken would be a huge victory. This parabolic move desperately needs, at the very least, some sideways action, if not a further drop, to make it enticing enough and enough value for traders to get involved. The euro has gone back and forth during the trading session on Monday as we are sitting just below the 50-day EMA. The 1.16 level is sitting underneath, and that could offer a certain amount of support. And ultimately, I think this is a scenario that we have the Federal Reserve and the ECB both with interest rate decisions this week. And that, of course, will have a major influence on what happens next. It is worth noting that since the FOMC meeting, the US dollar has basically just rallied against the euro, and you'll notice that the last couple of days have been a lot of sideways action and choppy behavior, but they just can't seem to keep gains in this market. That might be something worth watching. If we break down below the 1.1550 level, then we could open up a move down to the 1.14 level where the 200-day EMA currently resides. The British pound initially rallied a bit during the trading session here on Monday, but all things being equal, this is a market that I think continues to see a lot of overhang and a lot of pressure with the 50-day EMA above there offering a little bit of a barrier with the 1.3427 level right there and opening up the possibility of a fade the rally type of situation. If we were to break down below the 200-day EMA, then the 1.32 level starts to come into picture for support or a floor. Anything below there really opens up quite a bit of selling, perhaps down to the 1.30 level. All things being equal, I don't necessarily want to buy the British pound because it has not behaved quite right for a while. And at this point in time, I look at rallies that show signs of exhaustion, perhaps with long wicks to the upside, as potential shorting opportunities. Although I'm the first to admit that I'm much more comfortable shorting the Canadian dollar or the euro than I am the pound against the greenback. The US dollar has shown itself to be pretty noisy against the Swiss franc. During the trading session, continuation of this sideways action where we are trying to find a floor. The 0.79 level is a significant floor. And I think at this point in time, it will end up being a situation where maybe this is it for the downtrend. But even if it is, it's going to take significant time to turn things around. If we can break above the 0.80 level, then it opens up the possibility of the 0.81 level as a target. Anything breaking above there opens up the possibility of a move to the 0.82 level. Ultimately, this is a market that both currencies are considered to be safety currencies. So with that, it is going to be noisier than many of the other currency pairs. But it is worth noting that we really haven't done anything, despite the fact that the United States and China came to at least a framework of an agreement overnight. You'd think that there would have been more of a reaction here. This is a market that's just very quiet, and ultimately, this is a scenario where I think we're just trying to find a little bit of a floor here. The US dollar tried to break out against the Japanese yen during the trading session on Monday, but the 153 yen level seems to be a little bit of a barrier. At this point, I think a short term pullback would be very probable, but I also believe that the 151 yen level should be significant support. If we were to break out and make a fresh new high, a new swing high that is, then it opens up the possibility of a move to the 155 yen level. All things being equal, this is a market that I think continues to see a lot of volatility. And I think this is a buy on the dip scenario as the interest rate differential continues to favor the US dollar. And with the idea of the Bank of Japan out there looking to perhaps keep interest rates low for the foreseeable future, especially with the new government elected, I think it's probably only a matter of time before we go to the upside. But with all of the central bank action this week, I don't think that a lot of traders really want to stick their neck too far out into danger. So that might be part of what we're seeing here on Monday with the hesitation to break out to a fresh new high. The US dollar initially dipped slightly against the Canadian dollar, but it has turned around to reach the 1.40 level. The 1.40 level is a large, round, psychologically significant figure and an area that has been important more than once. So if we can truly move to the upside, then the 1.41 level is likely to be a short-term barrier. But if we can break above that level, then the 1.4250 level would be the next target. And that is where I think we eventually go. Both the Bank of Canada and the Federal Reserve have interest rate decisions this week, so I would expect some choppy volatility, but I still believe in the overall upside. And I think you've got a scenario where we had broken the neckline of an inverted head and shoulders, which, oddly enough, is a measured move to the 1.4250 level using classic technical analysis. The interest rate differential still favors the US dollar, and at this point, we'll just have to see if that continues to drive the market higher. Keep in mind that these two countries still have a significant amount of tension between trades here, as the United States is likely to add another 10% in trade tariff to the Canadian imports. And with that, it ends up hurting the Canadian economy pretty significantly. The Australian dollar gapped higher to kick off the trading session on Monday, pulled back just a bit to see a little bit of support as we filled that gap, and then took off to the upside. This does make a certain amount of sense considering that the United States and China are, at least in theory, in the middle of a trade agreement, at least the framework, that is. We are above the 50-day EMA, and we are right around the 0.6550 level. And with that being said, it is an area that's shown quite a bit of perhaps interest, maybe magnetism. If we can break out to the upside from here, the 0.6625 level is an area where I think you would see a certain amount of resistance followed by the 0.67 level. Ultimately, this is a market that he continues to see quite a bit of noisy behavior in this market, regardless of what's going on. The Australian dollar just has not been a great performer, although Monday's been very good to it. There's still a lot of noise in this market, and one would have to think it's probably only a matter of time before a headline crosses the wires to cause more chaos. The New Zealand dollar gapped higher to kick off the trading session, fell to test the 0.5750 level and filled that gap, and then rallied, but we're still negative from the opening price. The question at this point in time is, do we in fact fall from here? If we do, then the 0.5725 level being broken to the downside opens up a move down to the 0.5675 level. If the market rallies from here, then the 50-day EMA is sitting right around the 0.5825 level. That could be a bit of a resistance barrier, but ultimately I think this is a situation where rallies will continue to be sold into. The New Zealand dollar, of course, is highly sensitive to China, and therefore the US-China trade relation talks will have a lot to do with what happens next. The euro has gapped a little bit lower against the British pound on Monday, gone back and forth and pretty much filled that gap and cleared things out. The 0.8750 level is an area that's been a significant barrier multiple times, and we are seeing a little bit of divergence in the moving average convergence divergence, or MACD indicator, with price. So I'm watching this one very closely because it could be setting up for a nice short, possibly, or a major breakout opening up a nice long. We're right there where we are on the precipice of making a bigger move. The 50-day EMA is sitting right around the 0.8675 level and rising, and I think this is a situation where it is a market that I think continues to be very noisy and choppy, which is its nature. But you can also use this to determine where the euro or the pound may go against the US dollar in relation to each other. So in this case, the euro should be strengthening against the US dollar more than the pound. We'll just have to wait and see. I use this pair a lot as a tertiary indicator, but we'll just have to wait and see whether a nice trade actually sets up. It's definitely worth watching right here. This could be a nice little mover if you keep an eye on it. The euro has broken above the 0.9250 level against the Swiss franc as we are trying to re-enter the previous consolidation area. The question is whether or not we can continue to see the upward momentum. It's probably worth noting that Thursday was a wicked hammer, and it would be hard for me to believe that the Swiss National Bank hasn't actually been involved, because they're known to do that against the euro. And of course, the wicked candlestick and the massive range definitely throws some questions into the market. The 50-day EMA is sitting around the 0.93 level and dropping. That could be a bit of a short-term barrier, so we'll just have to see how things play out. If we do reach that area, then signs of exhaustion probably get sold into. The 0.92 level is obviously an area that somebody out there, the Swiss National Bank, is interested in defending. We could fall towards that area again, but if that's going to be the case, it'll be interesting to see how the market behaves in that general vicinity. If we get another vicious pop to the upside, then it will become very obvious that the Swiss are involved. The euro has rallied against the Japanese yen and, in fact, has hit a new high. This is a market that looks like it's really ready to take off to the upside, and I think short term pullbacks end up being buying opportunities. The 178 yen level being broken above is a good sign, and I think you have to look at this through the prism of a simple momentum move. That being said, both of these central banks do have interest rate decisions this week, and that, of course, is something that you need to be very cautious. The 175 yen level is an area that I think a lot of people will be watching very closely, as it is the top of the gap and, of course, is a large, round, psychologically significant figure. This is a market that I think anytime it pulls back, there will be plenty of buyers willing to get involved, mainly because of the weak monetary policy that is almost certainly going to be weak coming out of Japan. So I think this is a Japanese yen story, not so much a euro story. And this is something that you will see time and time again in the yen denominated pairs. The euro, the British pound has gapped higher against the Swiss franc in more of a risk on move, but you have to be careful with the 1.0650 level. That's an area that was previous support and has acted as resistance multiple times now, so it's worth paying close attention to. If we can break above there, that actually would be a pretty strong victory. I don't know that you get the all clear at that point, but it certainly would be making a statement. The 50-day EMA is near the 1.0725 level and dropping, and it should end up being a bit of resistance. If we fall from here, the 1.0550 level could be your next target, but again, I think we're playing games with the Swiss franc that could get dangerous here fairly soon. While the Swiss aren't necessarily worried about the British pound per se, it is a market that they do a lot of trade with, and if we see the Swiss franc strengthen across the board, and especially against the euro, then the knock-on reaction could end up being a very big mover here, just peripherally, and other Swiss franc denominated pairs. At this point, the British pound looks very strong against the Japanese yen, and it does look like we are trying to get back to the 205 yen level. The 205 yen level, of course, is a large, round, psychologically significant figure, but I think you have the possibility of a breakout this week, especially if the Bank of Japan ends up being a little bit more dovish than anticipated. Ultimately, I think you have to understand that traders will continue to see this as a situation where you get a little bit of value here. I think eventually you will see the interest rate differential kind of take control here. I don't like the idea of getting too aggressive, and I do recognize that 205 yen is going to be a significant barrier. Breaking above that, though, opens up a big leg higher. We'll just have to wait and see. The Canadian dollar did rally against the Swiss franc, but it gave back gains at the 0.57 level. There is a major downtrend line going right along this move. And of course, we have the 50-day EMA near the 0.5750 level. All things being equal, this is a market that I think continues to see a lot of volatility, but quite frankly, this is a situation where I don't like the Canadian dollar, period. Yes, I understand that the Bank of Canada could say something to shock the market, but really at the end of the day, with the trade negotiations or lack of with America, I think the Canadian dollar is not something you want to own over the Swiss franc of all currencies. Any signs of exhaustion will end up being selling opportunities, perhaps a move down to the 0.56 level. The Canadian dollar against the Japanese yen has shown itself to be strong, and it looks like that the 110 yen level is an area that I think continues to be very important. Short-term pullbacks open up the possibility of testing the 107.50 yen level, an area where you also have the 50-day EMA coming into the picture. If we can break above the 110 yen level, then it opens up a move to the 111.50 yen level. But having said that, I think we've got a situation that the market will continue to perhaps punish the yen, not so much celebrate the Canadian dollar. This is a market that I think will continue to be noisy, and it should continue to go long here. I don't, again, like this pair as much, but I think the knock-on effect from other yen-related pairs will probably be the biggest driver here. The euro has continued to go back and forth against the Norwegian krone, and the session here on Monday initially tried to break to the 11.65 level and then turned around to show signs of hesitation. The 11.55 level is an area of support, and I think you have to pay close attention to these levels. If we can break above the 50-day EMA, then it opens up the possibility of a move to the 11.75 level. If we break down below the 11.55 level, then the euro could get hammered, but all things being equal, I think continues to see a lot of volatility and choppiness. Ultimately, this is a market that short-term traders will continue to try to play the short-term range. The euro initially fell a bit against the Swedish krona, only to turn around and bounce from the crucial 10.88 level. The 10.88 level is a level that has been important multiple times, and I think you have to look at it through that prism. Ultimately, this is a market that I think ends up being range bound. And as long as we can stay above the 10.88 level, it is possible we go all the way to the 11.08 level. If we break down below the lows of last week at 10.85, then we could very well drop to 10.75. But right now, this just looks like a market that has nowhere to be, and range-bound traders are going to love that. The New Zealand dollar has gapped higher against the Japanese yen, only to turn around and show signs of weakness to fill the gap, and then turned around to show signs of life. Ultimately, the 88.50 level is roughly the as resistance. If we can break above there, then the 89 level is an area that I think could be challenged. Anything above there opens up the New Zealand dollar to a much bigger move. And again, I think this is the situation. It's not the New Zealand dollar, it's the Japanese yen. You'll see not only this pair rally, but you'll see like the Canadian dollar Japanese yen pair rally, the euro yen pair rally, etc. I don't like the New Zealand dollar per se, but I really don't like the Japanese yen right now. The New Zealand dollar gapped higher against the Swiss franc, fell to fill that gap, and now it looks like it's trying to get to the 0.46 level. But that's an area that I think is going to be difficult to break out of. The market breaking above the 0.46 level opens up the possibility of a move to the 50-day EMA and perhaps the 0.4650 level. Market participants will continue to see this as a downtrend, and I really don't see how you get overly excited about buying this pair, trying to pick the bottom, as it were. There's a downtrend line that also will come into play right around the 0.4650 level, right along with the 50-day EMA. I'd love to see a bounce to that area, and then a long wick to the upside, showing a bit of hesitation to get short. I've got no interest in buying this pair. If I'm going to short the Swiss franc, it's going to be against other currencies. The US dollar has been very noisy against the Mexican peso during trading on Monday, as we are sitting just below the 18.50 Mexican peso level, which also features previous support and resistance, as well as the 50-day EMA and a downtrend line. Keep in mind, this is a pair that is heavily influenced by the interest rate differential favoring the Mexican peso. And of course, you should also keep in mind that over the last several weeks, we've more or less been range bound between 18.20 and 18.50. I still favor the downside, and signs of rallies that show signs of exhaustion, I think, are sold into. That being said, this is a pair that gets very choppy at times, and we're just seeing more of the same. However, the longer term outlook for this pair is still rather negative, and it's really not until we break above 18.75 that I start to ask questions. You're going to have to be patient, but collecting that swap on the way down does make shorting this pair a little bit more palatable. And as long as the U.S. economy is somewhat okay, that bodes well for the Mexican peso, as Mexico is the world's largest exporter to the United States. Crude oil has been all over the place. It fell initially, it rallied again, and then it fell again, as we continue to see a lot of questions asked about Russian sanctions. Will they actually take this time? It's hard to tell, but really at this point, we've heard the story about Russia being blocked out of the markets for years now, and yet they're still in the markets. I don't see how this is any different, but ultimately time will tell. If we can break down below the $60 level, that would be a bad look for the oil market. And quite frankly, even though we bounced a bit during the trading session on Monday, between that and the shooting star, I'm really hesitant to get long here. I think a little bit of sideways action by an impulsive market could have people trusting oil, but if we break down below that $60 level in the next couple of days, that would be ugly. The NASDAQ 100 is off to the races as the US-China trade deal has people very excited about this. And of course, technology companies tend to be some of the biggest winners. The fact that we have broken out of what had been a bit of a channel and are now above it tells me this is a market that's going to get impulsive. If that is going to be the case, this is where you want to be, because few things move like the NASDAQ when it comes to equities. I like buying short-term pullbacks. I do not like shorting this market, and I think after this, you basically have a situation where the 25,000 level is now a floor. The S&P 500 looks very much the same as we continue to really grind to the upside. It's probably only a matter of time before we test the 6,900 level, and I think the 6,700 level is your short-term floor. We also have an uptrend line and a 50-day EMA indicator that is following that uptrend line, but after the move on Monday, I think it's really difficult to get short. I think at this point, you have to look at any pullback as a potential buying opportunity in what is obviously a very strong market. The Dow Jones 30 has gapped higher as well, although it is underperforming slightly in comparison to its contemporaries, but still, this is still a bullish looking chart. A pullback here could fill the gap, and then I imagine you'll probably have buyers willing to get involved and take advantage of cheap contracts. I would anticipate that 47,000 could end up being at least psychological support, if not structural support. It is, of course, a large round, psychologically significant figure, and it's an area that previously had been a little bit of a barrier. Bitcoin races to the upside as everybody celebrates the risk-on move. We are not above the $117,500 level yet, though. I think that's your next real clear signal. That being said, I think this is a situation where we are trying to find the bottom here, so short-term pullbacks open up the possibility of buying Bitcoin for shorter-term trades. If we break down below $105,000, then that would obviously be a very ugly turn of events. With the weekend news that the United States and China are at least somewhat agreeing on a framework, it does make a certain amount of sense that we will see risk on trading, and that's been reflected especially in the equity markets. However, it's worth noting that we have central bank decisions from Canada, the United States, Japan, and the European Union this week. So we're not out of the woods. Metals to me look like at best they'll go sideways. The big gold rush, silver rush, as it were, I think is over for the most part. That doesn't mean we can't go sideways for a while and then go higher. But at this point in time, I'd be very leery of big shots higher in either one of those markets unless there's an actual thing going on outside of the markets, some type of reaction to geopolitical news or the like.
Hola Prime, trade with transparency.